All right, market update time. Let's get into this. First thing I want to talk about, obviously, January of 2021 was the highest January ever on record for condo sales in the 416, so Toronto proper. In fact, it was the highest January on record for condo sales in general, but we're going to focus in on Toronto here. So you're looking at an 85% increase over January of last year, and January of last year was not a slouch by any means. It was a pretty normal year. Just an astronomical amount of buyers and investors returning to the condo market in Toronto. And Scott Ingram's months of inventory chart was recently updated for February, and you can see that the buying opportunity for condos when we were in a balanced or buyer's market was back in October through December. That opportunity has come and went. We have actually flipped freehold in terms of inventory. And what I mean by that is we have 1.1 months of inventory in the condo sector. Anything below 2 months of inventory is an aggressive seller's market, and so you're starting to see bidding wars. You're starting to see, condos sell well over asking with no conditions. In many instances, we've had clients who, viewed a condo 24, 48 hours after listing, and it was withholding offers, but then there was a bully offer, and before you know it, you have 7, 8, 9, 10 offers on a condo. It's getting intense out there. There's tons of buyers flooding back into the market, absorbing the inventory that was there. And it's stark contrast from just November and October when you could pick off really good deals for 50K less than you would have paid the year prior. Those opportunities are vanishing pretty quickly, both in the pre-construction and the resale space. So a lot of pre-construction projects that were having difficulty moving inventory last year, all of a sudden are moving inventory incredibly quickly. So let's look at one particular example here. This is one that jumped out at me, 50 Wellesley. It sold 27 days ago, unit 1604, for $891,000. And then unit 1904, which is the exact same floor plan, parking, really no difference between the two units except 3 floors of height, sold for $1,030,000. So 891 to 1.03 in 23 days. So you're looking at a jump of about 15% in value. Some more, so also we are having a webinar Tuesday, this Tuesday, February 16th at 6 p.m. We're going to go over the market, how COVID impacted the market, how we think it's going to continue to impact the market, what we see for the rest of the year. We're going to go over upcoming pre-construction launches and prices, and we're going to go over ROI projections and cash flow on a particular condo investment opportunity right now that we have that is priced under market value. At the end of this webinar, you will know more than 99% of condo. You'll know more than 99% of not just investors, but agents out there about the current state of the market and what's coming in the pipeline for Toronto, okay? So let's move on to the next example. We've got 16 Yonge. So 16 Yonge, 2 units, 2701 and 3901. Again, identical units, just 12 floors apart. It sold for $805,000 30 days ago, and then the same floor plan sold for $900,000 just a week ago. So again, another 3-week spread, and you're looking at nearly a 12% increase in market value. 16 brokers. So if you watch my other videos, I've already covered this one, but I'll just touch on it quickly here. Sold for $515,000, and then the exact same unit, 2 floors higher, sold for $577,000 a couple of weeks later. So you're looking at, again, a 12% spread. And this is just a function of inventory absorbing and us going from, condos getting 1 or 2 offers, so you have room to negotiate, to all of a sudden getting 8 to 10 offers, and you have to go in well over ask with no conditions to win anything. Everybody knows this year has been incredibly bullish for detached freehold properties. This chart is awesome. It shows you a couple different areas. So Whitby up 40% year over year. Burlington 39%, Mississauga detached up 23%, and City of Toronto detached up 22.6%, which is amazing because we think about Whitby, they had affordable prices to start, so they had room to run. But when you're talking about Toronto, detached properties in Toronto are starting at $1 million or more, right? You can't even get a 50-foot lot in Alderwood for 1.2 million anymore. And meanwhile, during this, we see City of Toronto condos is down 2%. And of course, that's an average, it's a median price. You've got certain sectors of the market that are down 5%. You've got other areas of the condo market like lofts or boutique buildings that might be up 5%. But the point here is that a lot of people say they want to buy the bottom. They want to buy when condos are a good deal. That's right now. Like, I look at this chart and the first thing I see is opportunity.
You smell that? What is that? What? What's that smell?
The cologne?
No.
Opportunity.
No. Money.
Reason being is you've got, stocks are up 30%. Detached homes across Ontario are up 30%. The only asset class that hasn't really run yet is condos. And I think we're seeing it start to run now at 1.1 months of inventory. If the current trend of absorption continues, this is going to be like 2017 all over again. And in 2017, we saw 25 to 30% appreciation in the condo sector. And I wouldn't write off this year either for that type of appreciation. We're almost certainly going to see double-digit appreciation this year in the condo sector if these trends remotely hold up for the rest of the year. And this chart just really drives this point home. So this is the average price multiple of a condo versus a detached property in Toronto. What you can see is going back over time, the average is somewhere around 2. And that's, if you look at other major metros, that's normal. So a 2x multiple makes a lot of sense. And what that means is, if in a city you can buy a freehold property, a detached property for $1 million, your average condo price should be about $500,000. That's how those values sort of line up over time, and that's how segments kind of appreciate together. But when you have something like an exogenous force like COVID, you see detached start to run and condos start to stagnate. So we're up to 2.4 now, which means that condos have this runway. This is like rocket fuel for the condo segment, because now you've got all this sort of delayed appreciation that can take place under the right conditions. So for example, people start getting called back to the office, or vaccines start rolling out, or just sheer value disparity. So when you look at the price gap and people are deciding between a detached and a condo, all of a sudden condos are starting to look like really good deals again. And that's part of the reason why we're seeing so many buyers flood back into the condo segment. And I think we're going to continue to see that into this year. One thing I want to touch on is the mortgage deferral cliff that ended up being a big nothing burger. Nothing happened. The deferral cliff, like 98% of people are back to paying their mortgages, 99%, and we've seen no rise in delinquencies. And people like to say delinquencies is a lagging indicator, it takes time to happen. Yeah, that's true. But I just want to remind people that in 2008, during the financial crisis in the States, we actually didn't really see much of a bump in delinquency. And part of that is because, remember, in Canada, we have very different lending principles and requirements, and we're giving people far less leverage. So, in Canada, for example, we can't get zero down mortgages. We can't use our stock portfolio as our down payment. Like there's a number of reasons why Canada's housing industry is more stable, and I'm not going to get into that in that video, but I just want to, in this video here, but I just want to point that out, that in 2008 we fared pretty well. Like you can see, we had a slight dip in housing, and then things started to trend right back up really quickly. Meanwhile, in the States, they saw 30% housing price decreases. All right, so immigration targets in Canada are up, right? So Canada's targeting 400,000 immigrants per year for this year, and then we're looking at 421,000 immigrants in 2023. That's a massive increase from where we were at about 350,000, and we know from experience that a big chunk of that immigration comes to the GTA. About 35% or more of that immigration gets concentrated in the GTA, and you have to remember, RE/MAX did a great study that showed 30% of immigrants buy within 2 years of getting here. Now, putting that aside, any of the immigrants that come here and rent also cause, they absorb supply on the housing market. So if they rent, they're driving up rental prices, which is driving up cap rates, which means more people invest into real estate. So it doesn't really matter if immigration results in home sales immediately or not. Either way, it causes supply side stress on our housing system, so it's incredibly inflationary. Any level of immigration above housing completions is incredibly inflationary for housing, and that's why the Canadian market has been outperforming the American housing market for so long. Some people have expressed doubts about our ability to actually hit those numbers, so I just want to show you this chart. So last week, we sent out 27,000 express entry invitations, which is up massively. You can kind of see the increase. It's like a six-fold, a 5 or 6x increase over our normal, which is about 5,000 per week. If we continue this trend of this many express invites, there's no question in my mind we can hit that 400,000 a year with ease. We'll hit that number with ease. Just a quick note here to remind you guys, I did a video on how mortgage rates affect investment returns when you're talking about rental units. So just a quick recap here, and I won't go over it in much detail. I'll link the video in the description. A 15% decline in rental rate is actually entirely offset by a 1% decrease in mortgage rate when you adjust for principal repayment. So a lot of people are talking about, rents in Toronto are down 5 to 20% depending on the condo building, depending on where the building is located, and depending on the type of unit. This is true, but I think if immigration remains at the level that we're seeing right now, and if they hit their targets, those rental rates will bounce back incredibly quickly. All that extra inventory on the market will get absorbed when we start allowing foreign students back in, and when our immigration starts to pick up, which it's already doing. So I think, mortgage rates aren't going anywhere until at least 2023. We know that. And even then, it's going to be slow and steady increases, if any at all. But rents are going to bounce back incredibly quickly. And again, this is why you're seeing pre-construction launches start to move up their timeline, and people are getting thousands of work. Like, for example, there was a launch recently in Oakville that got well over 1,000 worksheets, and they don't even have that many units. So pre-construction investors are flooding back into the market. Resale investors as well, and of course end users are also all of a sudden interested in condos again. So I think you're going to continue to see these trends into 2021. And this is an interesting chart that we recently found. I'm not going to touch on it too much, but we have the highest unemployment in the G7, and it's easy to look at that and say, well, most of these people are low-income people. They're not actually people who are buying condos or homes. So it shouldn't have an effect on the market. But the truth is, those people are renting homes, right? They're renting condos, they're renting homes. So if they can't pay their rent, then that causes the stress to move up market. And I think that's why we've seen, condos, because they're the most rented asset class. There's not a whole bunch of detached rentals in Toronto, have stagnated while, detached have gone up 30%. But it is important to note that the high income earners, anybody $30 per hour or more, we've actually seen growth in employment for the higher income sectors, and the trends look like they're going to continue. So that's an important note. And again, if you like this type of market update, like and subscribe, and come out to our webinar on Tuesday. We'll chat, we'll talk about the market, we'll do some Q&A, it'll be great, and I will see you guys next week.